Global markets react to US tariffs. Is this the start of a new trade war? Global markets are in turmoil, following a sweeping announcement by US President Donald Trump. In a move that stunned economists and shook investor confidence, Trump unveiled broad-based tariffs on imported goods, triggering fears of a new global trade war and sending shockwaves through financial markets worldwide. The announcement included a 25% tariff on all imported vehicles and a 10% baseline tariff on all foreign products, with even higher levies targeting specific countries like China, Vietnam, and the European Union. But what does this mean for global markets, businesses, and everyday consumers? Is this a bold strategy to revive domestic industry, or a dangerous gamble that could backfire? Let's break it all down. What happened? The tariff announcement. The announcement came on what Trump dubbed Liberation Day, a policy designed to reclaim economic control and punish unfair trade practices. The plan includes a 10% baseline tariff on all imports, an additional 25% tariff on all imported cars, targeted tariffs on specific countries: China 34%, Vietnam 35%, Taiwan 32%, European Union 20%. According to the Trump campaign, these tariffs are meant to encourage American companies to manufacture at home, reduce dependency on foreign goods, and protect US workers. But within hours of the announcement, global financial markets began to tremble. Immediate market reactions. Stock markets across Europe and Asia plunged. Major indices including the Nikkei, DAX, and FTSE 100 all closed significantly lower. In the US, futures for the Dow Jones Industrial Average, S&P 500, and Nasdaq tumbled overnight. Automotive stocks took the hardest hit. Shares of Volkswagen, BMW, Toyota, Stellantis, and Hyundai dropped sharply, reflecting fears of reduced US market access. Meanwhile, the US dollar weakened, sliding to a 6-month low as investors grew anxious about the impact on trade and inflation. In short, the market interpreted this as a high-stakes gamble with no guarantees of success. Why are markets so worried? It's not just about the tariffs themselves, it's about what they represent. These tariffs signal a return to aggressive protectionism in the world's largest economy. This raises several concerns. Retaliation. Countries like China and those in the EU may respond with their own tariffs, sparking a tit-for-tat trade war. Disrupted supply chains. Many global businesses rely on complex international logistics. Tariffs can increase costs, cause delays, and hurt margins. Higher prices for consumers. Tariffs act like a tax on imports. If companies pass those costs on, it could fuel inflation and hurt consumer spending. Slower global growth. Reduced trade typically leads to slower GDP growth, especially in export-driven economies. All of this leads to heightened economic uncertainty, which markets hate. How are major economies responding? The European Union quickly condemned the tariffs and announced that retaliatory measures are on the table. France and Germany both released joint statements warning that the EU would not stand idle while its industries are targeted. China has remained more reserved, but has signaled that it will defend its economic interests. There is growing speculation that Beijing could impose new tariffs on American agricultural or technology goods, devalue its currency to make exports more competitive, slow down trade approvals or licensing for US companies operating in China. These moves would escalate tensions and potentially push the world closer to a full-scale trade war. Sector-by-sector breakdown. So which sectors are being hit hardest? Automotive industry. Already under pressure from electric vehicle transitions, the new tariffs could reduce sales, increase manufacturing costs, and force layoffs. Technology. Many tech companies rely on global supply chains. Tariffs on components from Asia could hurt margins for firms like Apple, Dell, and Nvidia. Retail and consumer goods. Products sourced from abroad, including clothing, electronics, and home goods, could get more expensive, impacting sales and demand. Agriculture. US farmers may face retaliatory tariffs in global markets, reducing export potential and income. Energy and raw materials, steel, aluminum, and rare earth materials could see price volatility as supply chains adjust. The result? Increased costs, lower margins, and more volatility in quarterly earnings. What does this mean for everyday investors? If you're invested in global equities or US sectors that rely heavily on trade, this is a moment to reassess your risk exposure. Here are a few strategies analysts are recommending. Diversify. Don't rely too heavily on one sector or region. Spread your investments to limit downside risk. Look for domestic winners. Companies that focus on US markets may benefit if foreign competitors are sidelined. Hold some cash or short-term bonds. In volatile periods, cash is king. It provides flexibility and security. Watch currency hedges. A weakening dollar can hurt overseas investments if they're not properly hedged. And finally, stay informed. Trade policy can shift quickly, and being ahead of the curve is critical. Could this backfire on the US economy? Absolutely. While tariffs may offer short-term political wins, the economic consequences are real. Higher costs for businesses and consumers, supply shortages in key sectors, retaliatory actions from major trade partners, reduced investment from global companies. Even American companies could suffer if they rely on exports or operate overseas. That's why economists are urging caution, warning that this could lead to stagflation, a toxic mix of high inflation and low growth. If not managed carefully, this policy shift could end up hurting the very industries it aims to protect. Final thoughts. A new era of protectionism. This tariff announcement marks a bold and risky shift in global trade. It's a gamble on bringing manufacturing back home, restoring US dominance, and reshaping global commerce. But history shows us, trade wars are hard to win, and the costs are high. So the big question is, will this make the US economy stronger and more self-reliant? Or are we heading toward inflation, market instability, and global economic fragmentation? Let us know in the comments. Are you for or against these tariffs? And don't forget to like, subscribe, and hit the bell for more timely finance updates and expert insights. Stay informed, stay ahead, and stay financially prepared.